what is interesting is that how brief these opportunities to take advantage of dislocations frequently are. Some idiot hedge fund bought unlimited municipal bonds at, incredible margins. I think they bought 20 times more municipal bonds than they could afford with their own money, borrowing all the rest. And when those things were dumped on margin calls, municipal bonds suddenly got mispriced in America. But the dislocation was very brief.
But very extreme.
But very extreme. And so if you can't think fast and act resolutely, it does you no good. So you're like a man standing by a stream trying to spear a fish, and the fish just comes by once a week or once a month or once every 10 years. And you've got to be there to throw that spear fast before the fish swims on. It's a pretty demanding business if you do it right.
But there have been times, in the junk bond market, there was a 3 or 4 month period in 2002 where some really incredible things happened, and they happened on a large scale. So
it happens about twice a century.
Yeah. Which means that he and I have only had 4 or 5 times when we could do it. Let's go to number 4. Certainly in the 60s, we did some of what in a very general way would be called pair trading now, which is a technique that's used by a number of hedge funds and perhaps others that go long one security and short another, and often they try to keep them in the same industry or something. They say that British Petroleum is relatively attractive compared to Chevron or vice versa, so they long one and short the other. And actually that technique was employed first by Ben Graham in the mid-1920s when he had a hedge fund. Oftentimes, I read articles all the time that credit A.W. Jones with originating the hedge fund concept in the late 40s. But Ben Graham had one in the mid-1920s, and he actually engaged in pairs trading. And he found out it worked very modestly well, because he was right about 4 times out of 5, but the time he was wrong tended to kill him on the other 4. We shorted out the general market for about 5 years in the partnership to a degree. We borrowed stocks directly from some major universities. I think we were probably quite early in that. We went to Columbia and Harvard and Chicago and different places and actually arranged for direct borrowing. It wasn't as easy to facilitate in those days as it is now. And so we would take their portfolios and we would just say, give us any of the stocks you want to, and then we'll return them to you after a while and we'll pay you a little fee. And then we went long things that we thought were attractive. We did not go short things that we thought were unattractive. We just shorted out the market generally. It was always kind of interesting to me when I would visit the treasurer of Columbia or something like that, and I'd say, we would like to borrow your stocks to short. And, he thought his stocks were pretty good at that point. And he'd say, well, which ones do you want? And I said, just give me any of them. I'm happy to short your whole damn portfolio. I needed the Dale Carnegie course to get me through that kind of thing. We didn't have any specific ratios in mind. We were always limited by the number of institutions that would give us the stocks to short. So it was not a big deal, but we probably made some extra money out of it in the 60s. It's not something that would fit what we do these days at all. And generally speaking, I think if you got some very good ideas on businesses that are undervalued, it's really unnecessary to do any shorting out of the market. For those of you who are in the field, there's a kind of a popular proposal. Money managers always have some popular proposal that's being sold to the potential investors, and now there's something called 130-30 where you're long 130%, long short 30%. That stuff's all basically a bunch of stuff just to try and sell you the idea of the day. It doesn't really have any great statistical merit, but the fish bite, as Charlie says. And Charlie can elaborate on that.
Yeah, we made our money by being long some wonderful businesses. We didn't make it by a long-short strategy.
Number 3.
Mr. Buffett, I'd love to get your advice on something that's a little off the investing path, but that taps into your business experience and wisdom. I'm writing a book to help people of a more introverted nature get the recognition they deserve. What advice would you give to the quieter half of the population to help them raise their visibility in their careers?
Well, that's a very good question, and I sort of faced that at one time. I was absolutely, throughout high school and college, terrified of public speaking. And I avoided any classes, signing up for them that would require it. I would get physically ill if I even thought about having to do it, let alone doing it. And I took a Dale, first of all, I signed up. I went down to a Dale Carnegie course when I was at Columbia and signed up for it, gave him a check for $100, went back to my room and stopped payment on the check. This is a real man of courage you're looking at up here. And then I came out to Omaha and I saw a similar ad. I was at the Rome Hotel for you old-timers in Omaha on 16th Street, and I went down there. And this time I took $100 in cash and gave it to Wally Keenan, who some of you may know. He died some years ago. First time I'd met him. And I took that course, and when I finished that course, I went right out to the University of Omaha and volunteered to start teaching, knowing that I had to get up in front of people. I think the ability to communicate both in writing and orally is of enormous importance, undertaught. Most graduate business schools, they wouldn't find an instructor to do it because it would sort of be beneath them to do something so supposedly simple. But if you can communicate well, you have an enormous advantage. And to you who are talking to the group of introverted people, and believe me, I was in certain ways quite introverted, it's important to get out there and do it while you're young. If you wait till you're 50, it's probably too late. But if you do it while you're young, just force yourself into situations where you have to develop those abilities. And I think the best way to do that is to get in with a whole bunch of other people who are having equal problems, because then you find you're not alone and you don't feel quite as silly. And of course, that's what they did at the Dale Carnegie course. I mean, we would get up in front of 30 other people who could hardly give their own name, and after a while we found out we could actually pronounce our own name in front of a group. But we would stand on tables and do all kinds of silly things just to get outside of ourselves. And you may have thought by this point you may think it went too far in my particular case, but that's another problem. But you're doing something very worthwhile if you're helping introverted people get outside of themselves and working with them in groups where they see other people have the same problem and they don't feel quite as silly themselves. I think you're doing a lot for some human beings when you help them do that. Charlie?
Yeah, it's a real pleasure to have an educator come who is working to do something simple and important instead of something foolish and unimportant.
I hope he's not going to name names.